learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your watch list coming in on March 27, 2020, and today we are going to talk about if the stock market is back to normal, because what is going to happen tomorrow and even next week. Well, where we're at position with the market is very, very pivotal. We went up another 6% today. This is now 3 days in a row of green, and that's surprisingly a rare sight. And why are we talking about, is the stock market back to normal? Because a lot of people are going to ask this question, especially coming into this weekend. And it brings us all the way back to the first time we saw TLT break, March 6th. So what happened? We had that kind of up week. It started a little bit later, but then coming into the Friday, we said, the market could have a flash crash, and things went crazy from there, even on that weekend there. So this is a pivotal point. A lot of people are saying 3 up days in a row is going to be a V-shaped recovery. You could kind of see it. It looks like a little bit bigger. Some people are saying it's going to look like a W. It's going to come up a little bit, come down, and come up and come back down. Who knows? But that is what we need to talk about. So I'm going to go over that, go over some of the plays I'm looking at. I got 3 different stocks, and even tomorrow's strategy, if you guys don't know, it's a Froggy Friday. We better see you there in the morning and bring a friend. Just bring a friend to Colt Day down wherever you're safe on any of these safaris and journeys. It's going to be exciting. So I got some plays and then just overall market analysis looking forward and how we're going to position ourselves, because we saw a few different things today too. Even there's news at the end of the day with the Fed, and it let the markets pop. And then after hours, we saw some moves. The market's kind of holding up. It looks like we're going to get the bill passed. That's what Miss Pelosi said earlier today. We got some of the text. It looks like they're kind of coming to a deal, so we will see. But then also after hours, we saw the dollar move, the UUP. Those came down today. We have a lot to talk about. So you guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing. YouTube.com/thestockmarket. Anytime during market hours, just go there. You'll see us. All we ask is you're positive and respectful. You could come chat, ask questions, watch the market live, see the plays, anything you want. Shout out to Chad, baby. And the most important thing you need to do, post your watch list below. Let us know what you're looking at. You got any plays, comments, remixes, anything. We need to source that information, especially in these times right now, man. So let's get right into it. The keys is oil. I don't know if you saw that coming. So this was a big development for today. One of the only plays I made had to do with oil, but this is also going to be a good one to watch here coming into the weekend, or even watching the weekend developments. But oil is still an issue. You need to watch the currencies, but the oil developments are going to be key. So we've been looking at the oil markets today. I brought this up on stream. You can see this top chart. This is oil. You come here, this is the same thing that happened. Again, look at the dates, that last time, that March 6th leading into everything. Oil started to drop. That's when you saw oil gap down, but then oil stayed down even when the market bounced, and then oil dropped again, and now oil is still hanging out low. So even though you're getting a market bounce, and now this purple chart is it's linked to China, so it's actually not the S&P, but how the A shares have been moving with the S&P is kind of related. But oil is going to be probably the biggest key here moving forward, and that's what I want to see tomorrow. But there was news that either the U.S. wants Saudi to leave OPEC and join together, or that Saudi should leave OPEC or get sanctioned. But essentially, any more of these oil developments, it's still happening. It's still an issue. And the problem is, even if some of the stimulus and domestic stuff gets solved, we still have this virus and everything else going on. But the demand on oil is actually crucial, because surprisingly, we've been here for almost a month of these $20, $30 prices on oil. That's a problem, and that's the key I want to see moving here, and how I kind of even think the markets are going to be moving coming in this, next week is going to be important. But as you're seeing, the markets are going up. The premiums are kind of balancing out, not too much. It's still there's a lot of things out of whack, but it's kind of adjusting to this pace more or less. But just like oil, it's been a long time. But last time when the virus first happened, their economy dropped, and it wasn't like, it's like, how do we value it? We even said the longer China stays closed, it costs them every day. So that's the whole point. It's not like oil drops and it stresses out these companies and leads to issues. It's when that price stays low, and then day after day, now you start to compound how much you're losing. It's losing money every day. It's like the reverse of income. So keep that in mind moving forward. Keep oil in mind. But now, really, what I'm expecting, if we do hold up, we could. It doesn't necessarily mean this weekend has to be a gap down, and I think that's going to be the news. If you've noticed, some of the updates have been rolling out less and less, and you again, we saw a change in the narrative with everything going on. You're going to see these shifts, and I think the real thing that's going to happen is when New York gets critical. Como has been talking about it. We're expecting it. There's again, if you guys could even donate to any nurses or hospitals, do that. They need medical supplies wherever. But, these hot zones in Cali and New York, the situation's bad, but you're not hearing it every day. They're deploying stuff. Now we got the stimulus. So all that stuff is still going to take time. But I think when the markets are really going to react to see, it's going to depend on what happens when New York actually goes critical, when we really start to see that situation either get bad, or it's going to be as bad as we expected or not, and that's going to change things. But even moving forward, even with the markets, they say they're looking good, doesn't mean it's just going to bounce here. I'm using this to analyze whether it will be a V-shaped recovery or a W, or if this just persists lower and then we actually start trading like a real bear market. Because this has only been a month, so the bonds and currencies are still messed up. We have to see that, but like I said, every other day here or at the beginning of this week, we need to slow it down. Think about the prices, and if there's a bunch of moves, with wherever the prices are going. I said this even pretty much at the beginning when this started to occur, and that's what blew me away with how fast everything was moving. But don't forget this whole idea. It's like, take a look even here. This is what a W-shaped recovery would look like, is what I'm saying, that we're at this price, a week goes by, you're back at the same price. So now if another week or month goes by and we go up and down just to end up at the same price, think about what that means about the whole situation, how the market's pricing it in, and then now especially for your options if you're trading those. That's pretty much it. So let us get into the plays. So I did a few weird trades today. One, I wanted to buy, and in my logic here, I wanted to get some shares. I wasn't expecting the market just shot up open at like 4%. So I thought I would get some discounts. I wanted Snapchat at $10. So what I did here is I sold Snapchat puts. So I shorted 10 at April 17th, 11.50 puts at $78. So instead of buying the contract, somebody wanted to buy that contract. So I said, hey, I'll agree to sell you that contract. You give me the $78. Me, on the other hand, I will take the risk. So what does that mean? By selling the contract, I agreed that if they paid me by this expiration date, if they choose, I will give them the option, because I sold it to them. I didn't buy it. I said, I'll buy 100 shares of Snapchat at $11.50 from them. So I did 10 contracts. So it's like 1,000 shares. So how do I win or lose, or what's the point? I did this because I wanted to buy Snapchat anyways. So you could do this to build a position. If you want to buy stock, you could sell premium on it. You could even sell calls, but this is selling puts. And you do that to, if you sell the puts on the stocks you want to buy. And I talked about Snapchat a lot. You can see my video on it. We even talked about it way too long on stream today. But how I would lose theoretically in this situation is that come April 17th, if Snapchat is above $11.50, then I get to keep the $78. And I sold 10 contracts, so I collected $780. But now come April 17th, if Snapchat is below $11.50, I have to buy 1,000 shares of Snapchat at $11.50, but I'm okay with that, and I got paid $780. So 1,000 shares would cost me $11,150. You could shave off $780 because that's how much I got up front. So it's pretty much like me agreeing to buy 1,000 shares at $10.72 when the stock was trading at $11.50 or $11.90 today. So again, this is because I want to own this in my long-term portfolio, and that's what I plan on doing. But this is the play right here. You can see it on this portfolio. So again, credit was $780, so I got paid $780. Now, if the puts go up in value, you'll be negative, but for me, I'm just going to hold this till expiration, because by expiration, I'll either get to keep this money, and if Snapchat's higher, I don't get to buy the shares, but I got paid still almost $1,000, which isn't too bad. But if it goes down below, I get to buy Snapchat like I plan to do anyway. So if Snapchat dropped to like $5, I'll still have to buy it at $11.50, and I would have been able to buy more, but that's the risk I'm taking by getting this money up front. So that's part of the trade. And then what I did after that, we did it on this account too. That was weird. I went and I bought now 65 shares of Snapchat. So I got paid $780. So Snapchat's pretty cheap. So I was able to take the premium I sold on that, and then I used it to buy 65 shares of the stock. So we call this the ghetto dividend. So you could even do this by selling covered calls too, which I've done before. And that's what we'll do when the market starts going up. But essentially now I just got paid $700 to agree to buy Snapchat like I was going to do anyways. This stock doesn't pay dividend, but instead of taking that money as cash, I took the money as cash and I reinvested it like a dividend reinvestment plan. So I call it 65 shares for free, but either way, it's a win-win position. And we have a full video on this. I think it's called How to Trade Options Like Warren Buffett, because this is what Warren Buffett does. You sell puts on the companies you want to buy at the price you want to buy, so you get pretty much paid to do what you were going to do anyways, like I did in this case. So that was the first play I made, and then the two other plays I made, these were kind of interesting. This one, I kind of regret it. I might want to flip this one earlier. I figured I would hold it for a while, but this is me playing oil. So again, I think oil is a problem. The fact oil was even hanging out low today, it's not bouncing with the market. I really, really think that's going to rear its ugly head again soon. So, and especially with what we saw with the Nigerian currency and all this OPEC stuff, I like this, but somebody pointed out on stream, and in a very, very astute observation, one of my big rules, and I think I got too caught up in the hype and wanting an oil play, but I didn't want to play USO, because USO, we already sold out of those, but then the USO still had it's only $3. The upside was limited, so upside is the only way I could justify this. But the problem that I did was, this is $59 call on SCO, but I paid $1,450. And if I wanted to buy, 100 shares of SCO, it would cost me like $5,900. So I pretty much put like 30% down. I paid 30% of the value of 100 shares. And for just the right to buy, it's not even a down payment or anything. That's high for an option. So that's just a simple way to even analyze price with options. So I don't really like that. But the thing I could justify about it is that SCO, it's like an oil UVXY, and it could go up high. I mean, I think I won back in the day. I don't know. It depends on where it splits from, but I've seen this thing go as high as like $150, $200. But again, it all depends on the splits. But this is a levered index with oil and fear, so that's what kind of makes me feel better about it. But this play is really risky. It's really bad. Again, do not trade anything you see on screen. Again, you see the disclaimer there. Option traders shouldn't risk those up much. Please financial personally. Thank you. Have a wonderful day. But hopefully you guys could learn, and you're even seeing, it's a play. You're seeing what makes me like it, what I like about it, what I don't like about it. And again, it's the price and the price relative to the asset value of the underlying contract. But then now, what's the upside? So this plays more gambling, and this is me going more for it. So I you could blame Steven Sanders for this. We kept talking about YOLOs, and then this came up, and then the oil. So yeah, but there's that. And then I averaged down on the CMG, baby. I know some of you guys thought this play was good at first. A lot of people are like, this is an awful play. But some people like it too. This is an earnings play. So don't get it twisted on here. This one, that we were already up on this play 100%. Then we came back down, and now we're down a lot. And I did this on the risky account, aka the former small account. Wait, which one is it? This one, right? Oh yeah, here's the put right there. That's up there. So this is the one we got, the 335. Paid $950 for it, but this one's for June. We already own the May, and that's the one that we're down on. But we spent a lot more money on the May, so we lost on that one. I got this one on June, but even McDonald's today pulled on their credit line, just the restaurant industry. But the fact that this is covering earnings, and last time what happened with them, even again, they're a high growth company, so you kind of want to short the growth, especially if it has risk to this. But we'll see. But in general, it's an earnings play, so I like that play, and that's the last one I got. But that's pretty much it as far as everything else. Now tomorrow's going to be that Froggy Friday. Man, I'm excited. So we'll see. Usually, some of these Fridays and these updates, most of the moves might occur in the morning. But if we get intraday moves, it could be good. So be careful. It's very easy to get cucked on these Fridays, but sometimes you could get either an Ocean's 11, or if the market really does start moving, we could take advantage of it. Pretty much, you don't want to see a day like today would be good, where things kind of move throughout the day. But yeah, that was a pretty that happened in the first like 2-3 hours, and then you had the rest of the day. So again, that's what I'm saying. Most of the moves might just happen in the early. You want it to kind of be moving more, kind of go more up and down where the premiums decay. But there's going to be a good day. We're going to do some smaller plays. We got to control the budget. Again, it's easy to lose on the weekly. So your FOMO demon, YOLO demon, tomorrow is a day where you'll either blow up your account, or it's going to just take you out at the knees and you're going to tear your ACL. Because you're gonna see one trade tomorrow and be like, yeah, it's risky. You're like, yeah, I know. You're gonna get that voice in your head, and then you're gonna try like, oh yeah, it's a weekly, it's gonna be cheap, and like if it goes like this, it's close, I can make a lot of money. You're gonna throw a much larger position, or you're gonna see me do a large position, then you're gonna get inspired to do a big position and try to make a big gain. then you're going to instantly regret it. Then you're going to lose 50%. Then you're going to cut out, or then you're going to hold it, not knowing how the daily options trade. And it's not going to really kill you and blow up your account, but now it's going to put you in a weird position coming into Monday and the whole next week. Then you're going to be, you're going to be very vulnerable. You're going to be like twitching, like, you're just flinching at every play. So it's going to, just don't do it, okay? So just be very, very smart with that. Control the budget, $20, $10. They could go a long way on days like these, again, and pick and choose and scan, search, and call it out. But out of those plays, I'm going to be watching Intel. So again, it depends on the market. Some people say, do you want calls or puts? It depends on what we see. It's kind of pretty much playing the direction of the market tomorrow, but playing the weeklies, you could do calls and puts. So if the market keeps going up, I'm going to go for calls if tomorrow's going to be strong. But let's say it's going up and then news breaks and then it instantly drops, I'm going to go for puts. But if it's a broader market effect, you need to know there's certain companies when it comes to options and then even how the option prices are moving that are going to be a little bit more favorable. In that case, one of them I like is Intel. It's not supposed to move a lot. Like a big day is $4, so it's going to have cheaper options on Friday, so lower volatility. It's not expected to move a lot, so if something makes it move a lot, it's going to be easy to get cheap contracts that could go from a little to a lot. Another one is going to be Shopify, but this one I'm going to be setting up to average down, not to really play tomorrow, but I want to get another put on this because I already have one for playing for earnings. Apple could be one of these plays for tomorrow, and then the news, it just keeps bouncing back and forth, but we're still holding that other play that we got. That one's a weekly. I'm expecting to lose on that one. That one's just like the Boeing one. We'll see. We put $200 in. If things go crazy over the weekend, it comes back down. We'll come to life. We'll sell it. If not, we got that there as a risk reward type play. Like thinking about next week $200. It's like the dailies putting $20 in the right place. I put that play reacting to the news. That's why you got to be on stream, and that's why the stream alerts is important, not for the trade alerts, but for the news. You guys are underestimating the news and the information. Don't get me. Y'all don't feel me though. So maybe watching Apple. Then I like USO. This one might be one for tomorrow. Again, the question is if oil is going to pop off tomorrow or not. But keep your eye out for that. Both, kind of middle of the day around like 10 a.m. Eastern. Like an hour or two into the market, and then towards the end of the day at close, and then we'll see over the weekend. But I'll be watching the SCOs again, CMG, and then Boeing. Boeing should be exciting tomorrow. Has not disappointed lately, and we would have made a lot more money on that. That's crazy, actually. We would have made a much more prettier penny on that one, but watch them on Friday. They could be good. The contracts are still expensive, though, so that's what sucks that today's update, it did not help with the contract pricing and again, the ranges that need to move. So watch out for that. Oh, and I forgot, I made a Lulu play. I want to watch Lulu. I did an Iron Condor. This one, we'll talk about this, but I made a huge mistake today. And this is something you guys... So I'm watch Lulu for the continuation, but the mistake that I did was I was trying to do an Iron Condor on Lulu, and that I think would have worked out pretty well. Damn, I would have crushed it on there. That would have been beautiful. See, I was trying to do 10 of them. You guys saw me on stream. If you watched towards the last 20 minutes of stream, you could watch me. I was on the Tasty platform. I was putting in orders, exiting, and pretty much I wanted this Iron Condor. And what this Condor is it's like selling 2 credit spreads. So pretty much if we did it here, it's pretty much saying if Lululemon ended by the end of, was this a weekly too? Oh, man. Saying if Lululemon ended by the end of this week, tomorrow, if Lululemon ended greater than 193, but then less than 216, you would have made $175, but you would have risked $75. That's at 210, and that's off one contract. So I was trying to do 10 of these, and thankfully I did one at first. So you would have pretty much risked 400 to 2100. You would have pretty much made that if this play executed the right way. But what I did on accident, you're supposed to get a net credit. And the order, when the premiums, this is what sucks with volatility. When the premium was going crazy, it will trip out your brokerage sometimes. And I was going too fast. You guys saw me going fast. And instead of doing net credit, I did a net debit, meaning I said I'm willing to pay this much to get the trade instead of spend. And that led to a problem where I got the trade. So I'm not going to lose my money on this because both of these contracts are going to expire worthless. So this is the good part, but I pretty much paid nothing. I got filled at 0, so I got paid nothing to take on a $250 risk. So thankfully, you'll see, even though I paid nothing, if it expires in between these prices tomorrow and stays at these prices, I will be able to win. So that was a big mistake. So that's why be careful with premium, be careful with going fast, be careful with these markets and everything. But So I'm gonna watch Lululemon tomorrow. That could be a good one. I might be even able to double dip on those condors. That's what we've tried before. But Lululemon is usually a good continuation play. So some of you guys are new. You haven't seen earnings. Earnings is a really good time to profit off of options as well. So we have stuff like continuation plays. After earnings happens, it usually makes a move, but then the next day after, or maybe like a 2-day delay, you'll see it continue from what happens with the earnings and then kind of mixed in with the market. So watch out for that. Watch UUP. Had that after hours move, came down. I'm still in that play. We have time. I'm not going to average down just yet. I'm going to average down when the dollar starts turning back up in the direction we want, because the premiums are going to get clapped until then. So once it starts turning in our favor, then we will buy the premiums. A good example is what happened the first time we got into it, because that's how we were able to kind of take advantage of it. Last time it shot up, came back down, and then it took some days here. So this is a bigger weakness here. So we could really take advantage of this and see what happens. But that play, we're still in it. Watch Snapchat. Again, we got that play. APRN, those went up a little bit of the percentage points, or 30% from the ones we got yesterday. I still like that. Could be decent on the weeklies, depending, if expiring Friday, because now it's a cheaper stock, but we understand how much it could really move. But today really wasn't that bad. It's only moved $1. But if it does go in that crazy mode, that could be pretty interesting. Then watch HD and McDonald's. These are going to be good ones to trade tomorrow, assuming the premiums aren't too high, so maybe middle of the day. But I still like those. We're still holding our initial plays. Like I said, McDonald's pulled on their credit line, so I like that June put a lot more now. So it's still just holding it. I think it's like break even or slightly down. Walmart is another one of those lower volatility plays. And then that Bank of America Strangle, still in it, but we are still out of the money. I think we're at 26. So we needed to come up a little bit more than next week. But the calls I'm only down 3% on, and then the puts I'm down 33% on. But surprisingly, the puts should have depreciated a lot more. So I'm actually pretty surprised on that. And then finally, another play I want to watch tomorrow that could be a good weekly one. It's charging $60 for $20 out the money. So either way, but if those could come down to like $10 out the money for like $50, but tomorrow's a daily, so I don't know how I feel about dailies, but I still like NVIDIA, how it's moving. Watch Guild. They've been moving on the upside. There was something about them in Myrna, but again, they're kind of doing the whole, pandemic biotech type move, or anytime medical is related, they're an up, down, up, very, very volatile, still holding the level. I thought it was good. We had it on that pop-off week. We still have those contracts. We'll see, but that play is fizzling down and dying. And then LQD, I'm still waiting on my moment to get in there, but it at least stopped today. The prices were still up a lot. They're still like 300%, so I'm still going to be patient with that. Then TLT, GLD, still holding those. TLT got clapped on the maze. I might be getting ready to get into the June soon, so we'll see how this next few days plays out. But like I'm saying, I need to watch gold, the currencies and everything, and bonds balance out. They're still pretty broken, so a lot is going to happen. There's still uncertainty. Still got to take it slow, and, we're trying to get in on both sides, even, long-term, short-term, the more downside, thinking ahead for earnings, and, this is offering us a unique ability to look ahead. So just take it slow down the game, and be smart with it, baby. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need your head in the game, baby. Do not listen to the FOMO voice. He's going to get you on one of the slow days. He's going to get you when it's not as much right before it happens. So control the budget. Slow it down. Flip the switch, baby, and get hype and bring a friend to Cold Days tomorrow. I love you, man. The Cold loves you. Shout out to all of you for keeping it positive and respectful. Thank you very much. I'll see you in the morning. Let's go.